course, we're now joined by Kagiso Zwane, who's a competition economist from the Competition Commission South Africa. Thanks very much indeed for joining us and welcome to the program.
Good evening and thank you for having me.
All right. I mean, it must be essentially a difficult thing to track, though, because in theory, a business can charge what he thinks a customer's prepared to pay for his products.
You're correct. Businesses, we do expect, should be pricing independently based on their costs. However, our concern is that in the current economic climate, in fact, it began in 2020 with the pandemic, where markets have been subjected to shock after shock after shock, that the reaction to those shocks in the pricing behavior of firms may not be reflective of the underlying cost increases, and that they may indeed be overshooting on those cost increases. And that is why we are concerned, especially around the price of essential food products, because these make up the bulk of the consumption of poor South Africans in particular. And so we are concerned and on their behalf that they are not subject to price increases that don't necessarily reflect the underlying cost, and that are applied in a way that more than compensates for the cost increases underlying them.
All right. So how do you start to measure unreasonableness? Do you start with a base year, base product, base price, and then you say the gross profit on this is usually around 23%, and then year 3, you look at the same product, and then the gross profit has gone up to 43%. Is that the kind of indicators that you look at and you say, something's wrong here? The price of flour hasn't gone up by the same proportion.
Precisely, and that is what we've been doing with these essential food price monitoring reports. So these are compiled using publicly available data. It's the same data that Statistics South Africa collects for CPI and PPI reporting purposes. And where we can, we supplement that with data from the Agricultural Markets Division of the JSE, SAFEX, which gives the upstream price of various commodities, maize, sunflower seed, soybeans, etc. And as a first cut, a screening device, that is precisely what we do, Peter. We look at how this relationship has behaved in the past and whether that is still the case. So an example in the current report is maize meal. There was a certain relationship that is held between the retail price of maize meal and the upstream price of maize, and that relationship is broken down. And what we see essentially is that the price of maize makes up a lower proportion of the price of maize meal. And that is our first cut, as it were, to say there's something here that warrants further assessment into other actors in the value chain, such as millers or the producers who would then take the milled product and market it to retailers, or indeed at the retail level itself. So that is the sort of analysis that we do with publicly available data. We really try and understand previous relationships, how they've played out, and whether they are worrying divergences in those previous relationships. We also did the same with cooking oil. You may recall that at some point in 2022, consumers raised concerns about the price of cooking oil. And there we found that indeed there was a significant separation of cooking oil prices from the historic price of sunflower seeds, which then led to initiating an investigation into cooking oil prices. So we've since seen a bit of a recovery to those previous levels in that spread or the margin between the wholesale and retail price of cooking oil, which is telling us that something has happened to then bring the relationship closer to where it was before the shocks of last year. It was the period, I think, between March and August last year.
All right, describe for me, because we talked about something here called opportunistic price increases. What happens there typically?
So the concern really with opportunistic price increases is that when we have concentrated markets, as we do in South Africa, firms have price making power, which is to say that they can raise prices in a way that they wouldn't otherwise do if they had a credible threat of competition.
Right.
And so opportunistic pricing is really when firms are in that zone of market power and they take advantage of that market power to impose onto consumers price increases that may cover costs, but also go towards supporting higher profitability.
So sometimes there's no collusion, but it is quite clear that if one firm raises their price, the other doesn't keep his price, he also raises it. Is that something that you're seeing?
I think it probably exists in the South African market, that sort of price leadership dynamic, where one firm leads on the price increase and others feel that they can follow what that leading firm has done. I think you're right to say it's not necessarily collusion in the sense that it's not the directors of these companies coming together in a smoke-filled room to decide on the price increase that they're going to impose on consumers and the distribution of profits amongst themselves. But it is something which might be a concern if it's not related to the individual cost structures of those firms. And it might soften competition if there's a simple case of follow the leader instead of try to undercut the leader to the benefit of consumers.
So what can you do as the Competition Commission? I mean, there's always this threat of overreach in market forces.
Exactly. There is a sensitivity of regulatory overreach. I think regulators around the world are alive to the fact that we don't want to over intervene in markets and undermine the competitive process in that way. I think the monitoring work that we do is an important part of sending a signal to the market that we are vigilant about price increases, especially where they affect the well-being of the poor. And so we are keeping an eye on the market, and we are ready to use the powers that we have, the investigative and prosecutorial powers that we have under the Act to prosecute any pricing behavior or indeed collusive behavior that we feel falls short of the requirements of the Act. And, should such a case be run, the Act imposes an administrative penalty of up to 10% of the offending firm's revenue. And if it is a case of collusion, then there's also criminal liability for the directors of those firms or the staff members who are involved in the collusion. Because, of course, people have to come to that agreement. It didn't just happen itself.
We've seen some high-profile collusion cases in recent years. Is this still a practice that is still out there, or something hopefully that's on the wane?
We sincerely hope that it's not. Collusion is incredibly costly to the economy. It is described by academics as the most egregious act because it really seeks to deceive consumers into believing that there is rivalry where there is none. And so undermines their spending power and undermines their choice. I think the very big cases of the early 2000s, the bread cartel, which flowed into cartels in flour and, I beg your pardon, in maize and wheat milling by the big entities in those sectors, sent a powerful signal to the market as to how the Commission views collusion. And those were very significant penalties that were paid. And so we hope that that form of collusion is no longer taking place. That, of course, doesn't mean that other forms of anti-competitive behavior might not be taking place, such as opportunistic price increases or other sort of forms of abuse of dominance, which are covered elsewhere in the Act and not necessarily in the parts of it that deal with collusion. And that is also part of our investigation, and it's part of our monitoring, our continuous monitoring of our food markets.
Kagiso, we'll leave it there. Thank you so much for fighting the good fight for the citizens. Thank you very much indeed for the work that you do.
For having me.
Thank you. All right, that's Kagiso Zwane, who's the competition economist from the Competition Commission in South Africa, talking about some unfair practices that we've been subjected to as consumers by some corporates. And they're getting on top of that as they continue to monitor these irregular and sometimes opportunistic price increases that we are subjected to.